Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
I was reading about this concept called leveraged ETF. It's pretty much there in global markets right now, and it's one of the things which is making global markets slightly worried that the overall exposure, particularly in the AI-oriented companies globally, has gone up significantly thanks to leveraged ETF. I was trying to study whether that will have some impact on Indian market or what is the status of margin trading facility which Indian market has seen growing over last couple of months. So let's try to dig into this. I've taken the help of AI to figure out some data points. I'm sure these data points would be right. I've done some check, but pardon me if there are certain error in the data points. But more or less, the concept has to be understood, and it is also useful for you because finally, you should also know how much leverage you should take for your stock market participation. Now, let me define leverage for you. Leverage is that I have X capital and I want to take position beyond X. So, what do? I need to borrow that money. Derivatives gives you a natural leverage because there is a concept of margin in derivatives. So you pay margin amount and you get exposure of larger capital. But in cash market, there is no natural leverage, so you have to borrow money, and that money is called margin trading facility, which brokers offers to you. US, there are various ways of providing leverage. In fact, US is one country, I think they love leverage and they are innovating on a constant basis financial instruments based on leverage. Who will not forget that dot-com crash or the housing crash which came in 2008 that was largely driven by the leverage on housing asset. So US is known for these things and we have to understand that this is what their economy is. But are we living in a world which is now in the red zone of leverage and there could be a catastrophe which is waiting for us? My name is Vivek Bajaj and I've been in market for 20 years and I learn a lot, and this is my way of sharing learning with everyone. Let's see the presentation which Claude has made for me, and I'll also show you Excel sheet which exchanges share on a daily basis for Indian market leverage positions. Okay, so let's start. So US overall, an estimate is the debt associated with margin book is around $1.53 trillion. And the US leverage ETF AUM is $198 billion. What is ETF, leverage ETF? Essentially, it means that just like Nifty ETF, you buy Nifty ETF by paying 100 rupees, you get the Nifty ETF corresponding to 100 rupees. So if Nifty goes up by 10%, you make 10%. It is zero leverage ETF. But the moment say I add a 2x leverage, essentially what I am doing is you are buying at 100 rupees. If Nifty goes up by 10%, you actually make 20% because there is a leverage which the ETF owner is also taking on your behalf. Okay, it's like derivatives, but it's a great instrument for people who love to play leverage in their balance sheet. Korea has witnessed significant growth of leverage, and recently they saw massive loss on the leverage ETF, which got discovered. And I'll share with you the details in later slides. India MTF book is around 1.33 lakh crore, and this is all data which is shared by the exchange in their website. Okay. Leverage is at a record level everywhere, and it inevitably happens that whenever there is any asset class which gets lot of demand, people just want to be part of that demand journey. And some people don't take leverage, but some people love to take leverage because by taking leverage, you are essentially amplifying your return. Having said that, if losses also start, you are magnifying your losses. So people who take leverage, they understand this, that leverage is much more slippery if you make profit as well as if you make loss. So as I said, US, China, Korea, everywhere there is a increase in the leverage book. US $1.53 trillion, China almost 3 trillion yuan, South Korea $39 billion, India 1.33 lakh crore. quite high. If you consider historically, if you look at last 1 or 2 years, the leverage has gone up thanks to leverage ETFs. Why leverage ETFs are built to bleed? Okay, when the going is going great, there's no problem. But the moment going gets tough, you start seeing a lot of losses. Okay. Hello, my name is Vivek Bajaj. I have more than 20 years experience in stock market, and I can suggest you, if you are serious about stock market, download StockEdge app. It will really help you in your journey of wealth creation from stock market. Leverage ETF is, as I have explained you, the logic that if you get X amount of money, you get more than X as a profit because you are in a leverage, and it's a daily reset. So essentially, you are borrowing that for 2x 3 years, you are actually borrowing on a daily basis, which impacts your withholding capacity. Now look at the United States market. 198 billion is getting amplified on a single every single day bet. All these commission-free applications who claim that they are pro-investors app, what they are doing is they are giving easy access of these products to retail investors. So almost 868 leverage funds are listed, and that number is growing because it's a great money making machinery for all the people who are launching the ETFs in that way. The largest leverage ETF is TQQQ. It's almost $37 billion with a trading volume of almost 45 billion. More or less, you can assume that there is a lot of speculation happening in the world thanks to AI. Okay. There is a record margin debt in US, $1.53 trillion, dollar, and the growth has been significant. In last 1 year, it has grown by almost 51%, and it represents almost 2% of US market cap. Okay, previously it used to be whenever there was a big bubble, it used to be high in terms of percentage of market cap. So that's why it's important to track how much of your percentage of market cap is actually leverage. And if I look at Indian market, so I've seen this data comparing multiple countries. So if I look at multiple countries, China's MTF or margin as a percent of market cap is 2.4%, US is 2%, South Korea is 0.8%, and India is only 0.3%. So in that way, our country, in terms of peer comparison, we are not as leveraged as other countries are, but we still have a book of 1.33 lakh crore, which is almost 0.3% of our market cap, which is not a big amount. Okay, so in terms of data, we should be more comfortable that as a regulator, our regulator has been very mindful, and they have tried to bring in a lot of control so that a retail investor or a normal person doesn't get into that frenzy of over leveraging their position. But this is the status right now. This number, 1.33 lakh crore, can easily go to 5 lakh crore. Now, what will happen if that happens? Every household in our country is literally net saving household. Somehow, there is a growing demand of speculation in our country, thanks to financial intermediaries who want you to speculate because that's how they make a lot of money. But you have to consider this, that leverage after a point of time becomes like a vice where you can't leave it. You start enjoying it, and it becomes part of your lifestyle. You have to understand when do you want to leverage and when you should not leverage. Okay, if you are trading derivatives, the advantage of derivative is that there is a proper margining system, there is a daily mark to market, there are processes well established, so the possibility of you going bust there is very very low. But in case of MTF, it is also dependent upon how the risk practices of the broker is, but we will have tendency to go overboard if we start doing MTF aggressively. So my humble submission is that surely you can use derivatives, you can use MTF to build your revenue, because every one of us have right to earn money. With a small capital, you cannot make as much money as you would aspire as a stock market participant. But my humble submission is, have a limit to what you are doing, have a clear cut direction of what you are doing. There are certain stocks which are your house ratnas, right, which you don't want to sell ever. Do not try to pledge them and take advantage of them, especially if you're leveraging. Do not use it for derivatives trading, because then leverage could be magnified. For example, I bought Nifty ETF, okay, and I gave it to the broker for margin purpose. If a 5 to 6% haircut will be there, and then you use that to buy further Nifty futures. Possibly you can do that, but essentially you are also creating a leveraged ETF for yourself. Don't do that. Be very mindful of what you're doing. I'll share with you the Excel sheet related to leverage in India. This is the current state of leverage. This is Excel published by the regulator on daily basis. The highest leverage is actually taken on stocks like Reliance. Almost 2000 crore leverage is there. SGFC Bank, BSC, Infosys, Geofin, BHAL, Tata Consultancy, ITC. So the top companies, which are like one, the companies which you will hold forever in your family, people are using them as a real estate, as an asset, and pledging them to take position in other smaller companies, or for that matter to do derivative. Generally MTF is all about taking position in other stocks, not in derivatives. However, I still believe that this is under control. This is not at all has gone into a scary zone. But I still believe that if we all are mindful about this, I think that status what our country has right now with respect to global, I think we are in a comfortable position, and we should not do extraordinary aspirational work in building more position in the MTF book. Please be careful. Thank you. My video was all for giving you some understanding about how ETFs work globally, what is the scale, and where India stands. And I am very, very hopeful that you got the message which I'm trying to communicate. Thank you so much. Take care of yourself. Jai Hind.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.